All right, good afternoon, everyone. Let me just go through the date first. Today is Monday, January 28th, 2013, and let me just go through the results next. Crude oil, we were plus 18 ticks, gold minus 13 ticks, natural gas minus 8 ticks, beans plus 7, NQ plus 1. All right, so the net on the morning was plus 50 something. Now, we have started keeping track of how long it takes us to get to the 2 points, that 2-point goal. Today it took 42 minutes, 3 trades. I was up $115 per contract after 3 trades and 42 minutes. Yesterday, I believe it took me, I wrote it all down. It's in my spreadsheet. Not yesterday, but Friday. It took 71 minutes and 5 trades, and we're up $145. And Thursday, it took 32 minutes, 3 trades, and we're up $110. We're keeping track of this, just so you guys can see how long it takes to get the 2 points. Now, I know some of our partners had the 2 points before the market even opened this morning. Some of our partners, unfortunately, didn't have their 2 points before the market opened this morning. If you have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. If you want to take the free trial, in the free trial, all we ask for is your name and your email address, and you get access to everything you see here, the charting platform. You get access to our live trading room 2 hours per day for 5 business days. You get access to the trades, the setups. You get access to the weekly trading zones, tweets, all those sorts of things. Okay. If you have any questions about any of that stuff, just hey Charlie, just send us an email at support@cfrn.net, and we'll get you going. All right. So let's start out over here with crude oil. Okay. Crude oil was a pretty good market to trade early on this morning. We took 2 trades on crude. This first one right here, if we would have held on to this trade, clearly you can see it just went down and down and down. But we took 2 trades on crude. One was here and one was over here. The first one was a break even, okay? And the next one was plus 18 ticks. Now, somewhere in there we had also had a gold trade where we lost. We had an NQ trade where we won 1 tick, and we had a gold trade where we lost 7 ticks. So I guess it was, it was 3 trades to get to the 2-point marker, and that NQ trade added 1 more tick on top of it. But anyway, let's go through the trades. All right, what you look for, and I'll bring up my picture for those people who have not seen this picture. You will see it quite often. I haven't changed the picture. I don't remember how long ago I made it, but things haven't changed with it. And this is actually a crude oil chart. It's actually a crude oil chart, but it's actually a crude oil chart, but it will apply the same rules apply to all the markets that we're going to look at. Okay, so you'll see me show it again and again. Step 1 is you look for your bullish cross. Step 2, you look for space. Step 3, you look for a pull down. Step 4, you look for divergence. Now you look for a pullback to the BBC with a close in the direction of the crossover. And step 4 is you look for divergence. Okay, so there it was right there. That's what it looks like day after day. Now right here we're pulled away, came back up, tested the BBC, gave a down close. So step 1 was the cross over here. Step 2 was the pull away. Step 3 was the test of the BBC with a down close. Step 4 was the divergence. So I got short. After I gave 4 or 5 ticks, I moved my stop to break even. It came and got me out at break even. There was another one that followed up right here that you could have taken. Now in this one, it's just a little bit different than that one because the cycle is blue. All right. So when the cycle is blue, or when you don't hit the BBC, to confirm the continuation of the trend, you need to draw a trend line like this, and I go over drawing the trend lines in great detail in the members area. Workshop number 93, about an hour into it. But you draw the trend line, and you look for a down close below that trend line while you still have the divergence down here. All right. So right there was a great spot to enter in on that short trade. All right, and it went down and down and down, and when it slowed down and gave us another opportunity over here, I did exactly the same thing that I just described to you right here. I drew the trend line, I waited for the close below it. Once it closed below it, I got short, and I took 18 ticks profit out of it. It did it again right over here. I pointed this out to the guys in the live trading room, that they could have shorted on this down close right here. It dropped down probably another 10 ticks. Then it changed directions. Okay, go back to that picture. Here we go. We changed directions. This time we got a bullish cross, pull away, tested the BBC with an up close. Step 1, crossover. Step 2, pull away. Step 3, pull back with an up close. And step 4 is the bullish divergence. All right, so the up close with the bullish divergence is the spot to get long. Okay, simple enough. And that's what you do over and over and over and over and over and over and over. Okay, that was crude oil this morning. You can see right here after the end of the morning session, right here at the close of the morning session, we had some nice bullish divergence and it went up. Now, I got my 2 points in, what was it, 42 minutes this morning. If I'd have let trades ride, obviously I could have had it earlier, but it was difficult trading this morning after that 42 minutes, after I'd gotten the 2 points. You know, at one point I went from being up $115 a contract to being down about $35 or $40 a contract. And we ended up getting back up, but I guess the moral is if your goal is 2 points, then just stop at 2 points. I can't because I'm teaching and training, but if your goal is 2 points for the day, then just stop when you get your 2 points. All right. This was the Russell this morning, and I had said this morning we couldn't trade the Russell short right here because it was going into the weekly trading zone. It did work out well. You know, the same exact stuff over and over again. You know, if we go back to our picture again, in this case right here, a bearish cross, which was right here, pull away, pull back, tested the BBC with a down close. Tested the BBC with a down close. And it, kept going down, pulled back up, tested it, down close, and it kept going down right here. You're looking down here for your bearish divergence, step 4. Now down here, when you have your bearish divergence, what you anticipate is that this green line is going to work its way down into the cycle. When we have bearish divergence, what we're talking about is this green line diverging from the cycle portion of the slingshot. All right, and that's exactly what happened right there, and down it went, and down it went. And over here, we had bullish divergence, tested the BBC. If you'd have gotten long right here, you probably would have stopped out. Depends. Let's see, 0.6 and 0.9. Actually, you wouldn't have stopped out. I use an 8-tick stop on every single trade that I take. So that's it. There was an opportunity in here on the long side. I had pointed it out, but we didn't have any divergence to support it, so I didn't take it. All right. That was the Russell. I didn't even have a Russell Dom up this morning, so I didn't take any Russell trades. Now, gold. Gold, which is usually really good to me, was difficult this morning for me. It started out, and it was choppy right at the beginning. Right at the very beginning, it started out choppy. Right here on the down close, you see the bearish cross. Space, tested the BBC, down close. In this one, we had bearish divergence, but we had blue on the cycle, so we needed to get a close down below that trend line. The close below the trend line was right in here. I didn't take that trade or this trade over here. Both of them set up the same way. I did take this one when it went long. It stopped me out pretty much to the tick, and then it moved up and did exactly what I thought it was going to do. I missed the opportunity. Oh, no, I didn't miss it. The black line got below the green right here, so I didn't try to take that. I did miss this opportunity right over here, though. Right there. Okay, then it moved way up. Then it got, if you look here, this is 10:10, and this is 10:11, so it did all these bars in 1 minute. It just went crazy for like a minute there. I got short over here, and this one stopped me out to the tick and moved down, put in an 8-tick profit, and then it moved back again. I got stopped out to the tick on it, and I was waiting over here. I was going to take the short over here if it closed down below the trend line, but the green line was almost all the way into the cycle already, so I wasn't interested in taking that trade. Okay. Finally over here, we had a bullish cross, tested the BBC with an up close. You could have gotten long right in there. There was hardly any divergence. It didn't go very far because of that. Over here, you had a trend line, and it needed to close down below the trend line. It didn't close below the trend line until way over here, and the green line was already almost into the cycle at the time, so there was nothing in there. And that was the end of the morning session on gold. So I ended down in gold. I was down 13 ticks in gold. And let's see, the NASDAQ. Finally on the NASDAQ, I ended up positive. You know, the last 2 days on the NASDAQ, for those of you that may or may not remember, let me just look. On gold, the last 2 days, on Thursday I was up 18 ticks. On Friday I was up 1 tick. Today I was down 13 ticks. On the NASDAQ, on crude oil, on Thursday I was up 34 ticks. Friday up 18 ticks. And today up 18 ticks. On the NASDAQ, though, on Thursday I was minus 15, on Friday I was minus 16, and today, finally, I'm green on the NASDAQ. I was plus 1 tick. And it was right here. All right. Once this trade had gone 4 ticks in my favor and closed down below the MA1, I moved my stop to plus 1 tick, and that's where it got me out. And then it turned around. There were a bunch of other trade opportunities here on the NASDAQ this morning. I didn't get any of them, but there were a bunch of them. Right in here, you can see I highlighted them as they were happening. And let's see, there was another one right up here. It didn't go very far. This is 1107. There was a shorting opportunity right in here that I highlighted. And in the break, there were a couple more opportunities right in here. Now, we're doing the same exact thing. What I want you guys all to take away from this is that we're doing the same exact thing on every single market. We're trading 4-tick range charts. And these are range charts. They're not tick charts. They're range charts. Okay? We're trading that on every single market. And we are, we're looking for the same exact setup every time. The same indicator set, same everything. Here's my picture again. All right? This was crude oil, but we're doing the same exact thing on every market. All right? Oops. I'm trying to make that picture go away. There you go. Now on crude oil, remember this morning, guys, on crude oil, for those of you who were in the live trading room on crude oil, I said once crude oil gets moving, it tends to have a lot of momentum. Not crude oil, but soybeans. Once they get moving, they tend to have a lot of momentum and keep moving. In this particular case, I got short in here on the soybeans, and I took 7 ticks profit. It kept going down, and I highlighted this area right here. When it closed down below that trend line, I said that that's another spot where you could get short, and that went another 8 or 9 ticks. It then came up here, it hit the BBC. We had drawn a trend line in here, and we would have needed to close down below the trend line. That gave another 8 or 10 ticks. Then it turned around and it changed directions. Now, once it changed directions, we had bullish divergence. You can see this is during the break, so I didn't highlight or say anything about any of this, but the same exact trade setup over and over and over again. And right now, there's bullish divergence, and this right here is our trend line. So you would need to close above that trend line. All right, you could go long on a close above that trend line. The ES, we had 2 trade setups on the ES this morning. This one right here after the bearish cross. Little space in there, bearish divergence down to here. Tested the BBC with a down close. All right, and that dropped right down to the weekly trading zone. It actually went through it. But the entry on this would have been right in here at 97.25. And it dropped all the way down to 91.25. All the way down to 91.25, but you would have been looking for the exit right in here somewhere. Okay, it changed directions down here once it hit the weekly trading zone. It changed directions and it popped up. We had bullish divergence right here. Pull away right in there. You see bullish cross, pull away, tested the BBC with the up close. So right in here at 14.95 was the spot to get long, and you can see how far that went up. Harold, I see your question, and I will send you off some information, okay? I'll send you off some information to get in there. And that's it. Right there. Right now it's got bullish divergence. It's got some red on the cycle, so it needs to close above that trend line, okay? But there are 2 opportunities here on the ES this morning. This one and this one. And natural gas. We got into this natural gas trade over here, It had bearish divergence, and it came and stopped us out just about to the tick, and then it went down, and then it went down, just like it was supposed to. It changed directions. We didn't have any divergence here to take a long trade, and right now it's just pretty choppy, so there's no opportunity there on the natural gas. This stopped us out for 8 ticks this morning in the live trading room. Now, mind you, most of these stop outs that I'm showing you right now were, oh, actually there wasn't that many stop outs. It was only that one right there on natural gas, and two on gold is what it was. The 2 on gold were made up for by the crude oil. One crude oil trade made up for all the gold, and actually most of this one too. And then we made profit on the soybeans and profit on the NQ. Let's see, that was pretty much it. Now the yen had some opportunities this morning. Most of them right here, right at the open. Okay, there was one spot in here where we were looking at the yen and we wanted to get it closed down below this trend line. We didn't get the close down below the trend line, so we stopped looking at it. And that was pretty much it. That was pretty much it. All right. If anybody has any questions about any of this, when the cycle crosses the green line, is that a very powerful divergence? There's a question. When the cycle crosses the green line, it's the start of the divergence. Okay, that is the start of the divergence. Like right here, right over here, right here, and here, and here. That's the start of divergence. Is it powerful? Well, it depends what happens after it crosses it. Okay. You can, Matt. You can. I can't, but you can. I click on my charts all the time because I'm teaching, so I can't do it in trade mode right on the chart, but it is possible to do that. Yeah, you can just click on trade mode, and that'll enable your charts for orders. Okay. And let's see, did I skip any markets? I don't think I skipped any markets. I think I covered everything. Let's see, are there any other questions? I don't think so. All right, so we ended the morning up. I don't even remember what it was. It was like $55 or something like that a contract, which isn't huge. We were up 115 a contract after 3 trades. Then after about 6 trades, 6 or 7 trades, we were up $55 a contract. So the moral of the story here is set your goal, get your goal, and stop trading. I can't stop trading, but you guys can. All right. All right. If you have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. In the free trial, that will get you into the live trading room. How do you set up an extra DOM for a floating chart?
Just click the little DOM button and...
Yep, you can just click this little DOM button right up here. All right, and that will set one right up for you. Click that little button right there, and it'll set one right up for you.
It'll float it right over the top of the chart.
Yeah, like that. I can't because I have too many DOMs open already.
Okay, so you covered the free trial.
I covered the free trial.
.net/apply.
Yes.
You did?
I did.
Tell them it was 5 days?
It is 5 business days, 2 hours per day in the live trading room.
Okay.
It is.
And did you cover the part about where they get to actually download the platform and use the indicators?
Yeah, they'll be sent an email with a video in it that shows them how to download the platform and the indicator set. And then, if they want, they can just send me an email at support@cfrn.net, and I can send them my layout, so they can load up my charts.
Are you familiar with the part of the program where a person can utilize the simulator to put on and take off trades, just like you're doing in the live trading room?
They can?
Well, I got a memo. I'm not sure.
Yeah. Yeah, they can. They can set up their own DOMs and everything. Everything that I have going in here, they can set it up in a simulated account and put trades on and take trades off, just like I am in the live trading room. And you can apply the indicators, like this one right here, for instance. If you want to do the slingshot, you go to indicators, then imported, then CF Slingshot. All right. And once you become a trial member with us, you're sent an email, and in that email there's links to a lot of videos. One of them is how to set the Slingshot up. That tells you which ones in here to set to true and which ones to set to false, because by default they're all going to be false. What do you think of that?
All right, well, let's cut to the chase. What does
Okay.
all this cost? What does all this cost?
Well,
How much?
it's free.
What? Come on. No, seriously.
Yeah, no kidding. No kidding. It's free. Free.
Really?
5 business days. Free.
It's 5 days?
Yes.
You're saying that for 5 days you're going to let me use your charts, your data, your platform, your knowledge, and your indicators, and I'm going to be able to actually see if I can put on and take off trades and make money the same way that you do before I pay you anything?
Mm-hmm.
Really?
Yep. That is it.
Oh.
That is it.
All right, well, I'm going to call you on that, pal. I'll be there tomorrow morning.
Excellent. Excellent.
All right?
I'm looking forward to it.
Okay. In the meantime, we're going out to Vegas.
All right.
Have
All right.
some
That
fun.
sounds good.
Talk to our friends, Mr. David Williams from PageTrader.com